Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There goes the opening bell, and the markets have opened a tad lower. It's about 0.25% lower.
It's a very stock pickers market going forward, and I think has been for the start of this year at least. And I think there are a bunch of issues that are plaguing the market.
In 2018, we are projected to grow at a 7.4%.
I don't think much has happened or much has changed with the market. It seems that we're going to have to live with today being a very slow day.
On the negative side, what stands out is, the energy stocks, real estate stocks, auto stocks, and metal stocks. On the positive side, it's all consumer, and you throw in the IT.
Yet another volatile session on Dalal Street as Sensex and Nifty end with minor gains. Positive global cues lift the markets in late trade. Asian paints for the bulls. Tata Motors and ICICI Bank bat for the bears.
Shares of Voltas rise nearly 3%. Sources tell CNBC Tv18 Tatas could be trimming their stake in the company. That is a CNBC Tv18 exclusive.
SHRIRAM Group stocks slide in trade after a CNBC Tv18 report that the parent company could be planning a merger of SHRIRAM Transport and City Union Finance with SHRIRAM Capital, the owner company. That's another exclusive.
Two private banks are keen on buying strategic stake in IDBI Bank, but the government is not keen to sell. Sources say selling stake to a private investor at this juncture will not get the best value for the government. The IDBI stock continues to tumble in trade today.
InfoEdge rallies over 3% after investing fresh money into PolicyBazaar.com along with SoftBank. The investment takes PolicyBazaar's valuation over $1 billion. Those were the top 5 headlines from what was a desultory day on Dalal Street if you only looked at the indices, but plenty of action below the index level. Hello and welcome to Markets Today Talk Back, the show where we tell you all the nitty-gritties about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, my colleague Prashant Nair with me. Hi,
Lata, hi. So as you said, nothing very much on the index, although pretty violent moves, especially in the last 60 minutes of trade. At one point, we took out 10,800, only to collapse in the last 30 minutes of trade. Over the next 30 minutes, as Lata said, we walk you through what basically happened in the market, the day's top stories will come up, and also, the Q&A session. You ask questions, we'll answer them. Our experts, IIFL Sanjeev Bhasin and technical expert Mitesh Thakkar, are going to be on the job. Gentlemen, thank you very much, both of you, for being with us here. Let's first wrap out the day's big story in terms of what happened in the markets. Lata.
Well, basically, global cues were negative. Overnight, Wall Street and the Asian markets were struggling because of fresh threats from Trump, this time trying to black out Chinese investments. It was vehemently denied by his team on CNBC US, but the stock struggled. Separately, of course, emerging markets have been going through a downturn, and China today officially entered the bear market, losing 20% year to date. India, of course, is nowhere near a bear market, but the start was weak because of the Asian cues. And, we have not done really much, as I said yesterday, since my holiday. We've been struggling in a 100-point range or maybe a 120-point range, 10,700 plus to 10,850. And that's where we lingered for a better part of today. Midcaps, of course, are losing a little more. If you looked at the year-to-date performance, it's been bad. And today, that is a telling comment. At the index level, it may have fallen 0.2. But look at the advanced declines. 1,400 or nearly 1,470 stocks decline for 630 stocks that are rising. So clearly, the bears are hammering away at the mid-caps. But you tell us more about stock-specific action.
As always, just identifying what was strong and weak in terms of sectors. So energy, real estate, autos were the 3 big weak sectors. In terms of pockets of strength, FMCG, consumer, FMCG, consumer durables, and you throw in IT there, and that completes the list. Only 3 sectors with any meaningful gains today. Large cap stocks which were under pressure, Tata Motors. Basically, Tata Motors is back at Feb 2016 levels with that 4.33% cut today. Reliance Industries had a good run, lost 2.5%. Tata Steel was down 1.6 odd percent. Tata Power was the other loser as well, but not that big a say. Large cap cement did well. So Grasim, Ambuja, Ultratech, and you can go down the list and find more mid cap cement names which ended the day higher. Other large cap gainers, So Hindalco, we had TCS, Coal India, which were some of the other gainers. TCS, by the way, continues that amazing run. Broader weakness some were news flow related, some were generally weak. IDBI Bank 6% lower. We're going to get to that in a bit more detail. Take Solutions. By the way, the stock is at almost a life high, but it gave back some today. Gati was down about almost 6%, 1%. It rallied about 10-12 rupees from the 140 kind of lows. It gave back 5% again. Delhi Bilcon was down 5%. Future Retail was down about 6%. Indiabulls Real Estate and WeGuard were some of the other stocks which were lower. In terms of gainers, Prestige picked up. I mean, almost 50% of the Prestige's 9% gains came in the last 30 minutes. Liberty Shoes, Bata, those two stocks have been very strong. Muthoot, and as I said, consumer. You had Godrej Consumer Products, GSK Consumers, which did very well. And of course, United Spirits, Idea, which kept falling, and we had a question on Idea as well yesterday. Got to about 46 kind of levels, back at 58, 3.5 higher, and Hexaware was up about 5.25 and from the mid-cap IT space. Lata.
Okay, so that's the lot. Let's find out what our guests have made of where first the indices will go, and then, of course, individual stock questions. First to you, Mitesh, what would you do with the Nifty at this point in time? Just stalling at higher levels, but not a very attractive level to sell. So where from here on?
Lata, I think you were mentioning this in the morning that you've gone and come back from the holiday. The index is right there, but the stock prices have changed. I think that kind of movement has been there, for last so many weeks, and I don't have a signal of a breakout or a breakdown as yet. Most of the indicators still remain flat. So I think you would want to see the price either get past 10,850 or trade below 10,700 to significantly trade the index. Otherwise, it becomes a range trade. You try to sell around 10,830 with a 30-point stop loss. Conversely, buy around 10,700, 710 with a 30-point kind of stop loss and play as the index goes towards the other end of the range. So that's the only way of trading the index till we get a breakout on this contracting market.
Okay, Twitter questions.
Okay, we've got questions now. So Shiv has a question on Asian Paints. He's got 136 shares of Asian Paints. He's paid about 980 rupees each for them. He wants a target for the next 5 years on Asian Paints. Now, that's going to be a task. Mitesh, you want to first take a shot at this one? I mean, is this in a super bullish phase? We can project 5 years hence?
I think technically, anyways, working on a 5-year chart is difficult because it keeps on changing. But what I can say is that as long as the stock doesn't break 1190, 1200 zones, which is a very critical short to medium term support level, I would not be really worried. And the longer term supports are close to about level 14. But having said that, I think you have identified that on the long term charts, the maximum downside is roughly about 14 to 15% from here. The stock has been continuously making higher highs. So I would, conservatively put a target of around 1800 if you give it about 24 months from here. Beyond that, very difficult to look on the charts.
Oh yes, of course. But Sanjeev, fundamentally, you can have a call even up to 5 years. Would you advise him to stay put? He's in the money already, up about 25% on his capital.
Yeah, surely he should stay put. Asian Paints and MRF are two stocks which I've been tracking for 30 years and they have never diluted equity. The stock may always seem expensive as it is now, but 63% of the paint industry is the largest player in the decorative segment. I mean, he can keep holding 2,500, 3,000, who knows where it's going to reach, but it will be part of any rise in this market. It's the best consumption play, so please stay put.
Okay. With that, let's get to the second headline of the day. It's a CNBC Tv18 exclusive. Sources say that Tata Group is exploring options to divest some of its stake in Voltas. The parent company may look at selling a total of 9% held by various group companies in Voltas. The stock, meanwhile, ended the day in the green after slipping to an 11-month low. First to Kritika, who broke the stock.
Over the last 12 months, Tata Group has been doing two specific things. One is to reduce cross-holding and simplify the holding structure across group companies. And two is to increase cash flow from a group company level and from a group and an operating level. So what we understand is that there are many micro things that the group is looking at doing. And one of them is identifying individual group companies. So at this point in time, we understand that Tata Group may look at divesting some portion of its stake in Voltas, entirely in line with their plans to reduce cross-holding structure. So all in all, we understand from sources that from the 26.6% that Tata Sons has in its holding, Tata Group may sell about 4 to 5%. They also have about 0.58% stake of Avat Investment, which is one of the investment arms. They may exit that completely. Now, Tata Investment Corporation has about 3.01%. There's a very tiny portion of Tata Power stake, that is about 0.07%. But all of it together is going to come up to almost 8.5% odd stake, and that entire stake is likely to be sold off. Now, they're looking at various routes. So they haven't finalized the routes yet, but I understand that an OFS is one of the options that they may consider, and that could also happen in parts. It may not happen in one go. It's still in the works. We may see a couple of quarters for this to actually go through. But yes, this is in line with their plan to increase cash flow as well, not just reduce the cross-holding. And we understand from our sources that they may look at investing the amount that they get from Voltas into the defense and aerospace business, where, according to our sources, they are planning a significant investment. When we did contact Tata Group, they said that they did not want to comment on market speculation.
I mean, Voltas saw a pretty big, Kritika, thank you very much for that. It saw almost a 7-8% swing from the low to the high. I mean, initially the stock sold off, the low was 493. It swung back higher, the high was 532, finally closing at about 529 or so. Voltas, by the way, has also responded to the CNBC Tv18 news report. The company has said that the board is not discussing this proposal in its next meeting and that the management is not aware of any such development. So that's what the company is saying. We've got a question now. Bhushan B has written to us with a question on Voltas. He's got 300 shares of the company. He's paid 363 rupees, which means he's sitting in a whole lot of money. He's been holding the stock for the last 8 months. He's a long-term investor, wants to know if he should hold or sell. Sanjeev, you know, on news like this, that the promoter group wants to sell, you would imagine the stock is lower, but the stock ended up almost 2% higher today. So are people suspecting there's a bigger game afoot? What's your sense and what's the advice?
Yeah, so in the last 2 quarters, Voltas has tended to underperform because of some of the vertical not doing well, and we've had a sluggish type of a heat wave where the monsoon has been, the rainfall and the weather has been erratic. So AC sales have been a little bit of a dampener. On the other hand, the Middle East business is doing very, very fine, engineering and cooling. Voltas is a very good long-term story in the consumer durables, I think, and it's totally an India-centric, part 20% in the Middle East. So I would say stay put. Whatever the vagaries of the promoter selling 8.5, Tata has been one of the most transparent and visible groups, and I think that will be just part of the course. I don't see the stock trading below 500 in a major way, and we would use all declines to buy. We have a 1-year target of 675 on Voltas.
Okay, that question came from Bhushan B. Sounded like Bharat Bhushan. But somehow every time someone puts the word Bhushan, I think of a stock and I don't think of a person. Okay, we come to the third headline. After the failure of the SHRIRAM IDFC merger last year, SHRIRAM Group, we understand, is now working on simplification of its group structure. The company believes this will help in fructification of future deals. Joining us now is Nisha Podar, who broke the story. Nisha, what have you picked up?
Several stakeholders with direct involvement in SHRIRAM Group have shared with CNBC Tv18 that the group has revived the discussions to merge the company into one single listed entity, which means that SHRIRAM Capital, the parent company of the 2 listed entities, would merge SHRIRAM Transport Finance and SHRIRAM City Union Finance with itself to create one listed entity, so that any monetization, exit, or even consolidation or any deal becomes much easier, and they do not face a situation which they faced in IDFC deal. So that is one simplification exercise that they are gearing up for, but it will be full of challenges also because of human resources issues, or on the other hand, even getting majority of the minority stakeholders approval for this. But if it were to happen, several private equity players like TPG Capital, which already has taken the company, along with even KKR, all of them could be interested in buying a substantial stake in the one monolith entity. So needs to be seen whether or not this merger process really goes through.
Nisha, thank you very much for that. We've got a question now. Rajnikanta Verma has written to us. He has 500 shares of SHRIRAM Transport Finance. Purchase price is 978 rupees. He's been holding the stock for the last 10 months or so. He's a long-term investor, wants to know if he should hold or sell. 500 shares at 978 rupees. What should he be doing? Mitesh, what would you say?
See, this is one stock which I believe, while it's going through some kind of correction, the longer-term trend still remains quite hopeful over here. My sense is that I think, just hold the stock with a stop below 1230, 1235 zones. And I don't think those levels will be violated. It might just, correct for some time, be sideways between 1650 to about 1230. And I think eventually the stock will make higher highs. So I think, if it's looking at an investment horizon of, let's say, more than 18 to 20 months, I think eventually I'll look at levels close to about 2000. And as long as 1230 is not being broken, I won't be really worried about it.
Okay. Well, gentlemen, we have to take a mandatory break, but do stay on. We have more questions from our viewers, and our experts will be there to answer all your questions. Back in a jiffy.
Welcome back. You're with us here on Markets Today Talk Back. We are wrapping up the day's trading action, 8 hours of trading action through 5 stories. Mitesh Thakkar and Sanjeev Bhasin are with us to decode the day's action and, of course, answer the questions which you're sending our way as well. Well, we got through 3 of the top 5 headlines. Now this is the 4th one. CNBC Tv18 learns that 2 private banks are eager to buy a strategic stake in IDBI Bank, but the government is not keen to sell. It feels selling stake in IDBI Bank to a private investor at this time will not get them the best value. Meanwhile, IDBI stock continues to tumble and trade. Sapna Das is here with that story at this point. Sapna, what is the government's reasoning?
So clearly, sources have told us that there are many private investors who are interested in picking up a strategic stake in the IDBI Bank deal as and how that happens. But probably the government is not very comfortable with that proposition, at least at this juncture. Sources are indicating that at this juncture, giving the stake, a strategic stake in IDBI Bank to a private investor may not be the correct thing to do as far as the government is concerned in terms of the valuations and the value that will arise out of that. The other fear is that there could be vested interests in trying to buy out the strategic stake at a cheap rate. So keeping all of this in mind, clearly it's LIC that may actually romp home in this deal. Having said that, a quick look at the balance sheet size indications that 7,000 crores worth of non-core assets, 7,000 crore worth of real estate assets, and of course there's a market valuation also to speak about. So all in all, the valuations are not looking very bad, at least as of now, but probably it's not getting reflected in the current stock price. That's the key concern for the government. Apart from this, we are given to understand that post-deal, IDBI Bank will function as a subsidiary of LIC, just like on the lines of LIC Housing Finance, for instance. Last but not the least, it's going to be an acquisition by LIC, not really an investment, though of course they may be sitting at 51%. So IDBI Bank may either issue preference shares, thereby the government shareholding will get diluted automatically, and the government can sell its stake later through the divestment mode when the valuations improve, or probably the divestment route may still be open. Both these options are on the table, but the preference would be for the preference share capital issuance.
Okay, thank you very much for that, Sapna. But I mean, if it is an acquisition and not a financial investment, we have a problem. LIC has a board seat in several other banks. You can't be being a competitor, running your own bank and sitting on the boards of other banks. I mean, I'm sure those banks will have a right, those shareholders will have a right to take LIC to court for it. But let's see how this thing pans out. At the moment, it's more leaks and justifications. Let's see how the actual story looks like. We have Amit Hinduja on the line from Hyderabad, and he has a question on IDBI Bank. Yes, Mr. Hinduja, your question, please.
Yeah, I bought the share. Hello, ma'am. I bought the share of almost 130 rupees almost 9 years back. Seeing that IDBI is doing good and all this stuff, but I'm seeing it's been done very bad from past 6-7 years. If the government, I don't know, every 6 months or 8 months there is a news of that the government diluted, the finance minister do something, but all the fake news comes in the TV. Why don't you people, first of all, tell to the serious investor who has been old, buying this share from a very long time, this share, the bank has a value or no? Why does it have so many branches therein throughout India? And people who have bought it in 130, somebody have bought it in 180 also, because the share price is falling from past 250. But there is no seriousness of this shares at all, what I've seen it from past 9 years. So what do you recommend? I'm a very long-term investor.
Yep, I take your point. I remember I was a cub reporter when IDBI got listed, and it listed at 130 rupees. So it's really not done much for investors in a very, very long time. That was mid-90s or early 90s. But in any case, it's to the expert I will turn you to. Sanjeev Bhasin, what would you advise the gentleman at 135 purchase price?
Well, it's been a very tough investment, and like he's been cribbing that it's, disclosures have been far and few. But he should be aware, IDBI was a lending institution and it got converted into a bank. So it has a hierarchy of owning a lot of the assets which were on the lending book. It is no different from many of the other institutions like an ICICI or an IFCI. And it is a mold of, government holding 81% stake. All I can tell him is that I think if LIC does buy that stake, there will be an open offer between 75 and 80. And if he wants to look at that as an exit route, that will be an excellent opportunity. He can then put his money into some of the other private banks or maybe a state bank, or the choice will be money. But, the idea would be that at a higher rate above 75, try to exit, because rather than question, you should be prudent enough and book your loss.
Okay, book your loss. Very quickly, Mitesh, chartically, does it go up at all? Can the gentleman at least sell at a lower loss?
That can happen, Lata. I think there's long-term support around the 50 to 45 mark. So in that sense, downside is limited. But I agree. I think there's no significant upside left over here. So anything close to about 65, 70, I think would be a good exit price. And I don't think the stock will immediately drop below 45 at least.
Okay, well, that's the advice for you, sir. Both of them asking you to cut your losses and quit, probably with a slightly lower loss if the share rises. The fifth and the last headline for the day, Info Edge rallied in trade today thanks to its agreement with SoftBank, the Tokyo-based bank. Info Edge will be jointly investing $90 million in Etekaches, I think that's how it's pronounced. That's the company which owns Policy Bazaar. Now, Policy Bazaar, of course, the investment takes Policy Bazaar's valuation to over $1 billion. Here's what the CFO Chintan Thakkar told us.
We are sitting on large amount of cash. Cash has been central to our strategy. And we would be happy if there are more such opportunities available to us for more investment. We already have about 15 investments which are live with us. Of course, 2 or 3 are most talked about. The others are at a very early stage. But we would be happy to do the follow-on round in these investments, the one which we have already done. And plus, we are always looking for new startups. We have cash on our balance sheet. On our balance sheet is something like about $275 million, about 1,800 crores.
Okay, we've got a question now, which is coming in. Arghya Sanyal has written to us. So he wants to buy 70 shares of Info Edge and wants to know the right time to basically make this investment decision. I mean, the stock is down about 14–15% from the start of the year. Otherwise, last few years it's done very, very well. Sanjeev, would you say this is a good time to get in Info Edge?
Well, Info Edge has been one of the largest wealth creators in the last 10 years, since the time Sanjeev Bikhchandani went public. And I think you should buy it at any price and buy on every decline, because not only is a conduit for being one of the largest search engines over the riding companies, it also offers huge private equity interest, with Zomato being a #1, and now you've seen Policy Bazaar and Merit Nation, and so I can go on. But I think it's very prudently run, costs are under control, and this is a very, very India-centric model, with the private equity business being the icing on the cake. Surely buy it at this rate, and at any lower rates also keep accumulating.
Okay. On that positive note, Mitesh and Sanjeev, thank you very much for joining us. We wrap up this edition of Markets Today Talk Back.